The trade talk table is crowded. The White House saying over 75 nations have reached out to negotiate, and they expect more. According to the administration, it was all part of the plan.
We worked for weeks, every day, coming up with options for the president about how he was going to, land this plane. The president, who was being advised at the time by two of the best financial geniuses on earth, Howard Lutnick and Scott Bessent, said, let's just go to the next step now, because it'll make everybody understand that we've been really, really truthful all along about our objective of having negotiations.
The EU following the lead of President Trump, pausing their countermeasures for 90 days. Still no word from one of our biggest trade competitors, China. Bill Ackman says China's now isolated, and our own Larry Kudlow says they're boxed in.
Mr. Trump has completely outfoxed China's Xi Jinping. Xi took the road of escalation and retaliation. Big mistake. China is surrounded by American allies who are doing business with Mr. Trump to lower their trade barriers. China is completely boxed in. Not only is their economy in shambles, but their world position is also in shambles.
All of this as President Trump is meeting with his cabinet today. Tariff negotiations sure to be front and center. In the meantime, stocks are in the red as tariff talks ramp up, inflation cools down, and the big, beautiful tax bill takes another step forward. Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Taylor Riggs, Dagan McDowell, and Jackie DeAngelis. And joining us for the hour, journalist and author Batya Ungar-Sargon. Welcome, Batya. Good to see you.
Thanks for having me.
So let's start with you. I'm looking at your X account regularly because I'm interested in your take on the. You have an interesting profile. You're kind of coming from the left, but you're a big Trump supporter. You were a huge fan of these tariffs happening. Are you happy with how things are playing out now?
I'm really happy with how things are playing out. I think the goal here is we want Europe to be consuming more of our products, and we want China to be producing less of them. And if you think about that as a strategy for bringing dignity back to the American working class, to making the product of the labor of American workers once again competitive in the global market, you could not have asked for a better strategy. The Democrats are furious at President Trump for having the guts to pivot. Like, they just want him to fail. Even though they admit that they support tariffs, they have no real plan for how to get the dignity back to the heartland. And so I think this pivot is really, really working. And I will just say one more thing off the top. The gap between the private messages that I get from regular Americans across the country, people who don't have a 401k, people who work with their hands for a living, just your average working class person who supports this agenda and is willing to sacrifice in order to ensure a better future for their children, and the hysteria on Wall Street and the hysteria from the journalist cast, that gap is enormous, and people would do well to recognize that.
Speaking of Wall Street, Taylor, stocks flew yesterday after the announcement. They're down and have gone down more over the course of the day today. Is that sort of just a pullback from a huge rally or something else going on?
You missed it. I joked this morning. I was so excited yesterday, I almost gave birth live on air, right? Just kidding. Did not happen. But a 12%
I missed
rally.
That joke. I definitely missed that.
A 12% rally could do that to a girl.
But you know what? 90-day pause, Taylor. It lines up. 90 days.
Oh, yeah. 3 more months to go.
Can we put that on the calendar?
But if that auction would have gone any better, though, you really might have, actually, because I know it's the bond yields that get you.
So I'm coming to you today with calmness. Yesterday, I cited the toddler tantrum, and today I'm trying to not do that. So we have a really interesting chart where I laid out since the 1950s, the day after massive days like yesterday, on average, you fall about 2.2%. Now, we're below that level. But again, this highlights that yesterday's rally is sort of indicative of down days like today. Here's a better stat. After big days like yesterday, on average, 1 month later, you're up 2%. 3 months later, you're up 4.5%. 6 months later, you're up 14%. 1 year later, you're up 34%. 2 years later, you're up 50%. Past performance is not any indication of future performance. But again, after big rallies like yesterday, going back since the 1950s, on average, you can expect some volatility. But if you're that long-term investor, usually it pays off.
Okay, Jackie, I woke up this morning and I really wanted to take a look at all the reactions to what happened yesterday. And they kind of fell in two camps for me. One was Trump's master plan is happening, and the other was this guy got spooked and he gave up.
Yeah. And
What do you make of that?
I agree with that. I think it was a little bit of both, and you're seeing more reaction in the bond market with yields slightly higher today as well, and that is what everybody is saying was the trigger. But of course, we've got a different set of issues on our hands today, and that's what makes this so fun. I say that tongue in cheek, but now he's taken...
That was a laugh, like I'm not having as much fun as I might be saying.
He's taken the tariff on China up to 145%. That's adding some for fentanyl-related issues. So the tit for tat with China is going back and forth. And yes, I agree with Larry. He's boxed them in, and he's created a situation where he has, outed China to be itself. Everybody else came to negotiate, and now China keeps, reciprocating with tariffs and trying to play chicken with the United States. So we've got a situation when it comes to China's exports into our country, $440 billion of goods. They are supposedly frantic right now trying to figure out, because cargo is stuck on ships, where those ships are going to go. Can they unload them somewhere else and trade with other partners? At the same time, while they export more to us than we send over to them, they take some really important things: agriculture, soybeans. If you recall, I believe President Trump wanted them to take more soybeans. They never stuck to that part of the deal. But people are talking about, farmers for bailouts rather for farmers in this country if all of a sudden we're stuck with all these soybeans. So there are issues to think about. And I knew yesterday after, the celebration with respect to the stock market that it would take some time for this to play out, and it's going to continue to be a bumpy road. We had some good news this morning from Hassett saying 15 countries, have come to the table with negotiations and more solidified deals, but we don't know who those countries are or when we'll hear about those deals. And then you had some drama this morning with the House. They did pass the budget framework for the big, beautiful bill by 2 votes only, but they were supposed to vote last night. They didn't do it. And this morning it sounded like it was a little dicey. So we've got issues. I keep saying that, but we've got them.
And that was the greatest tease of what we're going to cover on this show today, like comprehensively everything we're going to hit on this show. Another thing we're going to hit, Dagan, and I blame you for this now. I wake up in the middle of the night worrying about Treasury auctions.
Me too.
Like, are we going to have a good Treasury auction today? So thank you for that. We have one today.
At 1 o'clock.
And so I want to, and I've been watching the stinking 10-year like a hawk every day. What do you make of where that is and this upcoming auction?
So there's a 30-year auction at 1 o'clock, ready to sell. The Treasury Department is, I sound like Yoda, $22 billion worth of bonds. If you look at the yield on the 30-year, it's up today. The 10-year is actually lower than it was at the close yesterday. The 10-year closed at 4.41. So it shows that it's up, but the yield is lower. Now, the yield on the 30-year is higher, so you're seeing a steepening of the yield curve between the 10 and the 30. I digress. It's worth noting yesterday in that 10-year auction, the direct buyers, foreign central banks and foreign buyers, were almost non-existent in the buyers of our debt. It was banks and insurance companies and large money managers. So what happened yesterday, the pause, the bond market before the pause, just our Treasury market, it just locked up. And there were no buyers in the middle of the night. And the pause, it took care of a lot of problems that the U.S. and the president and his team were facing. But one thing it prevented is the Federal Reserve having to come in and provide liquidity to our Treasury market. So that would have not looked good even for the president. That being said, I want to quickly just note, so we'll watch the auction later today, but this has opened Andy Brenner says, a Pandora's box. of the unknown, not just for businesses trying to operate in this 90-day pause when they have goods coming from overseas, but also in terms of the bond buyers or bond sellers and what might happen with our Treasury market. But the inflation numbers that came out this morning were incredible. This is from E.J. Antoni. Truly remarkable. Annual inflation from 09 to 21 was 1.8%. Then Biden drove it up to 8.6% for a year and a half. Then it rose steadily at over 3% for the rest of his term. Now President Trump is averaging 1% inflation, 1%. So that is good, great for treasuries. It also gives the Federal Reserve a lot of room to work in case we are headed for a slowdown because of the tariff fight.
Yeah.
Energy prices were the big reason the inflation number has come down, and that's worth noting for sure.
Yeah, it's amazing when you think about, we got a pretty dang good job number last week. We got a tariff kind of thing happening that's positive in a lot of ways. We got a great inflation number, and we've got the next move on the tax bill. I mean, that's 4 pretty big, I would call them wins in a row for the Trump administration. Markets didn't seem to care about a lot of those things today, maybe swamped by the effects you were talking about, Taylor. But it's worth noting. That's a pretty good string of economic wins coming into the end of this week.
Well, and the Fed's Goolsbee is highlighting that. He's just coming out and saying that the hard data on the economy looks pretty good. Andy Jassy over at Amazon said the same thing. We're seeing significant growth in discretionary items. We are not seeing meaningful impact from all the noise around tariffs. So again, this is the divergence between the hard data and the soft data. Watch what I do, not what I say. I can say I'm scared, but if I'm still spending, it's showing up in what Goolsbee is talking about, and it's showing up in what Andy Jassy at Amazon's talking about.
Can I point out one recession trade to watch, though? Walmart. Walmart today is down about 1/3 of 1%. Right now, it's down 0.39%. Over the last 5 days, it's actually up 2.25%. If you compare that to the S&P 500, today, 4.5% loss. 5-day performance, 3.5% loss. And that is astonishing given the fact that Walmart, 60% of its imports come from China.
Yeah.
And so people aren't even worried about the 125% tariff, the fact that China is virtually cut off from the United States. They'd bet on Walmart rather than other American companies that don't have exposure to China because it's recession.
Well, if President Trump is the most renowned negotiator in America, Walmart might be number 2. Ask anybody who does business with him.